Eric Muathe at Muathe.com with a quick look at the Bank Nifty here, and we're taking a look here at the first couple of trading days for the month. And even though we are slightly down, we start seeing the potential for what has been a level of potential resistance still playing out. And keep in mind, this being a monthly chart, the problem is it will take a while and it seems like it's not happening. But if you draw a line connecting the recent break levels on the Nifty, you can see right now, depending on how the month goes, this was the break level here in about, let's call it middle of 2015. Resistance on this black line for the monthly highs there. And then we are coming back and we seem to have hit that line and we are pulling back slightly. So the key, I would say, is this level here. If the RSI stays below 69.1, that would be rejection when trying to move above 69.1. If it can stay above this price number, then the market should be stable. Now this level here presents a little bit of a trick, because if you take a look at where the market broke down for major pullbacks recently, we see that this is where it took place. For example, take a look at this break, which coincides with the break of the highs of early 08. And again, it coincides with another break. This break of the movement of the highs here. And recently there was another break of the highs of 2015. Around that break level for those three major highs, the blue boxes, I can draw a line there that connects where it has been a problem. Should be something like that. And the problem here, or the issue, if it develops into one, is if it cannot move above that line, especially more so if it moves back below 69.1, then that would be telling us that this market has run into some type of a wall and that the market is due for a pullback. So confirmation of resistance here, especially if it starts pointing down, would be all one would want to see to be very, very cautious of the downside. And again, the market does make it a little bit of an easy way to follow, is anything above 69.1, and you can assume that the market is stable to bullish, while anything below 69.1 can be looked upon as being a market that is seriously in need of a correction. Now, I would not expect it to be a straight drop for now, because on the weekly, we see that the weekly continues to hold above 69.1. That's a sign of a strong market. So that can be encouraging if somebody still wants to play breakout stocks, as long as either the monthly is trading above 69.1, or here, as we can see, the weekly is trading above 69.1. One can still play breakout stocks as long as one of the time frames is above 69.1. If we take a look at the daily is also firmly holding above 69.1. So we can assume that the market is still stable, based on the fact that right now at this particular moment, you got your monthly chart, weekly and daily trading above 69.1. That's a sign of a stable to bullish market. And keep in mind, that is not to say that the market cannot pull back. So let's say it can pull back and this can be a major high, but because it has spent some time above 69.1 here in the last couple of days, chances are it's gonna test these highs at the very least. And a good example is here. Even though the market did pull back here, ultimately there was a test of the highs somewhere here. Hope that makes sense. It is only when we see some type of strong negative divergence that we can assume a market is due for a major correction. So here we saw an improvement in prices, but the RSI was also trading well. There was no negative divergence. It is only when it tries to move to new highs. So we can say this attempt to break out came with well lower technical strength. And that is what led to this little bit of a deeper correction here. So yes, markets do make highs by coming straight off 69.1, but that is unusual. Chances are we need to see some type of negative divergence. I do see negative divergence on the hourly because we had an improvement in hour to hour closing highs, but you can see that the technicals are making a lower high. That negative divergence does set the stage for what can be a pullback. But the key again, we have to go to that monthly chart. The controlling value here, in my opinion, is the big picture. And if the big picture is showing that the bank nifty is above 69.1, that's a sign of a stable market. Anything below this price on the monthly, on the RSI, is when you can really start expecting the market to pull down to the downside. Keep in mind, always the bigger time frame is controlling. So at the end of the day, if you want to look for one chart, one time frame to pay attention to, it is the monthly for the bank nifty, which should set the stage for the climate, or whether one should be aggressive long or very careful playing any type of breakout, especially in the banking and financial space. One quick look at the bank nifty, and we can see that it still continues to be within reason of this resistance line, which was the break of the highs of 15, which came to close to being tested there of the highs there, and now we are back to test it here. So the market is going to determine and tell us whether it has enough momentum to move higher. Whether or not depends on whether it can stay above this black line, which would be bullish, or failure to move above that black line and confirmation of resistance might suggest that the next major trend is down. So given that we haven't yet seen the market turn down for the month in a major way, we can still assume that net one can play breakout ideas, but to make sure that they also have tight stops just in case the market turns around and confirms this resistance here on the bank nifty. That would be a sell signal for sure, and also indicate that the market that needs to be avoided. And also we can see that that would also, if the market was to turn down, would confirm that the RSI for the bank nifty is below 69.1 and is also showing resistance on this line here. In fact, this line can be done slightly different so as to give us the previous major sell signal levels as we drew it earlier. So I can draw it right slightly at about 69.1, which again gives us these break levels of the highs of 2008, 2011 and 2015. So this is the key, whether we are going to see resistance here on the monthly, or whether we are going to see the market break out above this line and stay above 69.1 to give us the general climate where one can play breakout ideas. Now, unlike the bank nifty, we can see here for the nifty itself, we've been seeing an improvement in day-to-day price highs over the last 2 weeks or so, last 2 months or so. But here we see that we are making lower technical levels. So that negative divergence does set the stage for the nifty to be ready for a pullback. And also we can see that on the hourly, we had already seen that it had gave us that negative divergence on this recent move here. There was a slight dip, or at least a rejection, when it tried to move above 69.1. So on the hourly, we can see here that pretty much I would say it's a tough one to read because the market is sideways on the hourly. As you can see here, bottom side support continues to hold, and we can see that there's some type of a top side resistance. So even on short term, this market is in a tight range. I think eventually we either break out here for a movement higher, or we break below that wedge for a movement lower. So to conclude this, in my own estimation, the bank nifty should be the one to watch. Failure to hold above 69.1 on the monthly. If it fails to hold above 69.1, that's bearish. If it stays above 69.1 on the monthly, that's good reason to be playing breakout ideas because the market is stable to bullish. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.